kugira ngo tuze kuyi-uploadinga kuri YouTube. Okay. So rero ubwo tugiye gutangira kwiga. Uyu munsi turiga chapitre ya kabiri n'iya gatatu. Ubwo nibyo turi buze gutacingaho uyu munsi. So twagiye rero share right here. Mwese murabona screen yanjye?
Diego,
Okay. So chapter ya kabiri, legal concepts. Intro video. Katuyirebe.
This section will introduce you to the many legal concepts involved with the insurance industry. You will learn what 4 things make up a contract. You will learn the special features of insurance contracts. You will learn about the different type of agent and broker authorities, as well as some of the other basic legal concepts associated with contracts. In this section, pay special attention to the following key topics: offer and acceptance, consideration, legal purpose, competent parties, aleatory, adhesion, unilateral, not a personal contract, conditional, value or indemnity, utmost good faith, warranty, representation, concealment, insurable interest, express authority, implied authority, apparent authority, waiver, estoppel, and the parole evidence rule.
Okay. So hano rero ubwo twagize ubwo kano kararangiye. Tujye noneho kuri legal concepts. Izi ni za note ziba ari nyinshi. Again, ni ubushake bwawe bitewe n'uko wiga, ariko nyine si ntabwo iyo ushaka gutsinda vuba vuba ntabwo uta umwanya muri ibi ngibi. Ntabwo uta umwanya wo gusoma cyane ngo ibiki n'ibiki. Icya mbere ni ukubyumva, warangiza like no kubikora cyane akakunaniye ukakakoraho recherche. Ariko ibi just ni amagambo menshi. Uri umuntu usoma vuba vuba, that's good. Ariko uri umuntu uri umuntu wiga ushaka kubyihutisha, ibi ngibi ntibikagutesha umwanya, kuko ubyitayeho byose wamara igihe kinini. So nka gutya Nathan, abantu bari kwandika muri okay. So urashaka dusome se urabona uwo mwanya twawuvamura? Turaza kubyigira muri summary video hamwe no gukora ibizami iriya quiz, kuko ibi bintu kubisoma byajya bitwara igihe kinini. So niba ushaka kuzumva neza, again ubisome, ujye no kuri Google na ChatGPT na YouTube, kugira ngo ugende ubyumva. Twebwe dufashe umwanya tukabisoma byaba biri too much mu kuntu, ariko video igiye gukurikiraho n'ubundi nibyo badusobanurira. So let's watch the summary video. Iyo ni ingenzi, ariko njye ndi kwiga hano igihe ntayirebaga nkahita nigira mu bibazo.
You have now learned the legal concepts of the insurance contract. Let's review some of the key areas from this section that will help you prepare to pass. Insurance contract. Insurance policies are legal contracts. Contract law defines a contract as a legally binding agreement between 2 or more parties where a promise of benefits is exchanged for a consideration. In order for an insurance contract to be legally binding, it must have four essential elements: offer and acceptance, consideration, legal purpose, and competent parties. Offer and acceptance. An offer is made when the applicant submits an application for insurance to the insurance company. The offer is accepted after it has been approved by the insurance company's underwriters. Consideration. A consideration is something of value that each party gives to the other. The consideration on the part of the insured is the payment of premium. The consideration on the part of the insurance company is a promise to pay in the event of loss. Legal purpose. An insurance contract must be legal and not against public policy. If an insurance contract has an insurable interest and the insured has provided written consent, it has legal purpose. Competent parties. All parties must be of legal competence, meaning they must be of legal age, mentally capable of understanding the terms, and not under the influence of drugs or alcohol. And to review, a legal contract must have offer and acceptance, considerations, competent parties, and legal purpose. Special features of insurance contracts. Aleatory. Insurance contracts are aleatory, which means that there is not an equal exchange of value. The premiums paid by the insured are small in relation to the amount that will be paid by the insurance company in the event of a loss. For example, if you purchase a life insurance policy worth $100,000 and your payments were $50 per month, you die 3 months later. You have only paid the insurance company $150, but they will give your beneficiary $100,000. Adhesion. Adhesion is also known as take it or leave it agreements because they're prepared by only one party, the insurance company. They are accepted or rejected by the other party, the applicant, with no negotiations or changes. Unilateral. A unilateral contract is a one-sided agreement in which only one party, the insurance company, is legally bound to do anything. The policy owner is under no legally binding promise to pay premiums. However, the insurance company is legally bound to pay losses covered by the policy. Please note, if the policy owner does not pay their premiums, the insurance company does have the right to terminate the insurance policy. Personal contract. Insurance contracts are personal contracts between an individual and the insurance company and cannot transfer ownership without the insurance company's written consent. Conditional. Insurance contracts are conditional because certain conditions must be met by all parties when a loss occurs. Otherwise, the contract would not be legally enforceable. Meaning that if the policy owner is past due on his payments and the insurer dies, the insurance company does not have to pay the death benefit because the condition was not met. Valued or indemnity. Life insurance is a valued contract, which pays a stated amount, regardless of the actual loss incurred. Health insurance is an indemnity contract. It only pays the amount equal to the loss. With health insurance, you're not allowed to make a profit. Utmost good faith. Utmost good faith implies there will be no fraud, misrepresentation, or concealment between the parties as it pertains to insurance policies. Both the insurance company and the policy owner must be able to rely on the other for relevant and accurate information. The policy owner is expected to provide accurate information on the application for insurance. The insurance company must clearly and truthfully describe policy features and benefits, and they must not conceal or mislead the insured. Warranties. Warranties are statements that are guaranteed to be true and are part of the legal contract. Representation. Representations are statements believed to be true to the best of one's knowledge, but they are not guaranteed to be true for insurance purposes. Representations are the answers the applicant for insurance gives to the questions on the insurance application. Untrue statements on the application are considered misrepresentations and could void the contract. Concealment. Concealment is a legal term for the intentional withholding of information, which is crucial in making a decision. With insurance, concealment is a withholding of information by the applicant that results in an inaccurate underwriting decision that can void the policy. Insurable interest. Insurable interest is the most important aspect for establishing a legal insurance contract. To purchase insurance, the policy owner must face the possibility of losing money or something of value when a loss happens. This is called insurable interest. In life insurance, insurable interest must exist between the policy owner and the person being insured at the time of the application. Please note that insurable interest only needs to exist at the time of the original application, but does not need to exist throughout the remainder of the policy. Now let's learn about the agent's authority. An agent is a licensed insurance producer who's been appointed to represent an insurance company. As representative of the insurer, agents are given certain authority to perform acts on behalf of the insurance company. In the insurance business, an agent is always considered to be acting on behalf of the insurance company, also referred to as the principal. There are three types of agent authority. Express. Express authority is the authority granted to the agent by the principal, which is the insurance company, as written in the agency contract. Implied. Implied authority is authority not expressed or written into the agent contract, but which the agent is assumed to have in order to transact the business of insurance for the principal. It comes from the express authority, since not every single detail of an agent's authority can be spelled out in the agent's written contract. Apparent. Apparent authority is the appearance or the assumption of authority given based on the action or words of the principal. For example, when an insurance company furnishes an agent with a rate book, applications, and sales literature, the insurance company cannot later deny that a relationship existed. As review, the three kinds of agent authority are express, implied, and apparent. Other legal concepts. Waiver. A waiver is the act of voluntarily giving up a legal right, claim, or privilege. Estoppel. Estoppel is the legal process used to prevent a party from reclaiming a right or privilege that was already waived. Estoppel is a legal consequence of the waiver. Parole evidence rule. The parole evidence rule prevents parties from changing the meaning of a written contract by trying to introduce oral or written statements made before the formation of the contract. Fully understanding these key topics are essential as you prepare to pass.
Mwabyumvishe? Ehe, twagiye sasa. So, tujye kuri chapter exam ya chapitre ya kabiri. So, ngo namwe muragenda mumfasha tubiganireho. Ikibazo cya mbere mu bibazo 15 kirabaza giti: The part of a life insurance policy guaranteed to be true is called. Ninde ubona igisubizo?
Warranty.
Warranty.
Warranty. Okay, twagiye. Kubera iyihe mpamvu? So, impamvu ni uko a warranty is a statement or promise that is guaranteed to be true, and if it is found to be untrue, it can affect the validity of the insurance policy. So warranty igomba kuba ari ukuri ijana ku ijana. See? Okay. Cya kabiri kirabaza giti: When third-party ownership is involved, applicants who also happen to be the stated primary beneficiary are required to have ninde ubona igisubizo?
Je niyumvira ko ari all those involved Be family related since
Okay. So, undi yavuze ngo, yes, all those involved. Okay. When third party ownership is involved, third party ni ukuvuga ngo ni umuntu like wa gatatu, applicant who also happen to be the stated primary beneficiary are required to have all those involved be family related, cyangwa se cyaba ari insurable interest in the proposed insured. Ndumva cyaba ari iki ngiki cya kabiri, bagomba kuba bafite insurable interest. Ndumva muri iriya video ntakibonye. So, ngiye guhitamo icya kabiri turebe uko bimeze, ubwo nimba nabyishe nyine ubwo so murabona ko iyo hajemo umuntu wa gatatu ni iki? Ni umu owner, like tuvuge umuntu afashe polisi niwe umu owner ariko ayifatiye undi muntu, agomba kuba afite insurable interest, agomba kuba afite interest igaragara mu gufatira uwo nguwo yafatiye polisi. So nicyo insurable interest nicyo bivuze. Mwabyumvise? So noneho icya gatatu kirabaza ngo all of the following are considered to be typical characteristic describing the nature of an insurance contract, except bilateral, unilateral, aleatory adhesion. Turiho watanze igisubizo hano. A, D. Okay. Kubana nawe waje kandi wowe uri special. Ariko ya ugenda udufasha nawe nta kibazo kabisa. So rero so umuntu wavuze A, they might be correct. Client one. Okay. So hano baravuga ngo bilateral nyine urumva ni igihe interest ziri ku mpande zombi, kandi nature of insurance contract ntago biba biri. So bivuze ngo insurance contracts are typically unilateral, meaning that's only one party, the insurer, insurance in a company, makes a legally enforceable promise. The other terms, unilateral, aleatory, and adhesion, are characteristics that accurately describe insurance contract. So, ni ukuvuga ngo rero ni bilateral kuko pari imwe, insurance company niyo idescribinga, niyo imakinga the legally enforceable promises, nyine niyo ifite ibiri conditioned kuba ifite iyo promise. Umukiriya igihe ashakiye yayibreakinga, it doesn't matter, ariko bo as long as policy kiri muri enforce, they are legally required to do that. So ntabwo rero byabananiye. Ntabwo bilateral ari nature of insurance contract. Nabyumvishe. So ikibazo cya kane kiragira giti, when must insurable interest exist for a life insurance contract to be valid? Iki ngiki numva twakibonye muri ya video. Ninde ufite igisubizo? Okay, ndaje nsome ibisubizo byanyu. C,
D.
B, D, hari uvuze ngo D. Okay. A, okay. A, D, C. Turebe. A, D, C. So, muribuka ko muri video uriya mukobwa yabivuze, ni ukuvuga ngo insurable interest igomba kuba iri exist kugira ngo policy contract ibe valid mu gihe inception, numva ari iki? Inception of the contract. Bivuze iki? Bivuze ngo this means that at the time the policy is purchased, the policyholder must have a legitimate interest in the life of the insured. Nyine bagomba kuba bafite like ikintu kigaragaza interest iri legitimate, iri legally yumvikana. So noneho bakavuga bati a legitimate interest in the life of the insured. It does not need to be maintained throughout the entire length of the contract. Ntabwo ari ngombwa ngo ibaye maintaining, ariko mu gihe process, mu gihe policy iri kuba purchased, insurable interest igomba kuba ihari. So igisubizo cya nyacyo ni insurable interest must exist at the inception of the contract. Iri jambo inception ku bantu batabyumva kuko urumva ntabwo biba byoroshye buriya icyongereza si ururimi rwacu, n'abazungu ubabaje iri jambo bashaka kubwira ati ntabwo mbizi, ariko the term inception refers to the beginning or start of something. In the context of a life insurance contract, it specifically means the point at which the contract is initiated or comes into effect. For life insurance, this is the moment when the policy is purchased and the coverage begins. And it is at this time the insurable interest must be established for the contract to be considered valid. So, mushaka kwibaza ati ibisubizo ndikubivana hehe? Ni ukuvuga ngo ngewe ni byiza gukoresha chat GPT ku muntu nyine like ushaka kumva ibintu ufite umwanya, it's good to use chat GPT. Urabona nk'iyi kuntu yanditse ni iy'umukara yitwa chat on AI. So I pay for it, ni nk'amadolari 20 ku mwaka, and it tells you ntabwo ari byose nyine, ariko for the most part ibikubwira ibyanyabyo. So it's a great tool you can use kandi bikaba concise, kuko gutya turi kubiganiraho mu by'ukuri ni byiza kuko first urabimemoriza, second ubyumve wumve context, noneho nikigaruka ikibazo uhita ugitsinda vuba vuba. You have to read ukumva ikibazo babajije, nta mpamvu yo guhubuka wiruka. So ikibazo cya gatanu kirabaza giti a life insurance arrangement which iri jambo ko rikomeye. Iri jambo ndarisoma gute? Ninde ushaka kudusomera? Circumvent. Man. Insurable interest statutes is called a life insurance arrangement which circumvent insurable interest statutes is called. Wow. Tugomba kubanza tukamenya iri jambo icyo bivuze. Twongeye kurishaka. Uvuga ngo muri finance bagerageza gukoresha amagambo akomeye kugira ngo confusing abantu ubu nyine kugira ngo bumve yuko bari smart. Mugomba kubimenyera ibi bintu nawe kugira ngo umuntu agufate kuri expert ugomba kumwereka ibintu bigize biri complicated, you know. So circumvent means to find a way around or to bypass an obstacle or rule, often in a clever or deceptive manner. It implies using ingenuity or strategy to avoid something that might be challenging or restrictive. Wabyumvishe? So ni ukuvuga ngo ni ikintu kiri ni gute wa bypassing. So a life insurance arrangement which bypasses insurable interest status is called. Murumva cyaba ari nk'ikihe? Any ideas? Okay. Niba byabananiye reka nze ngire. So hano barakubwira ngo icyanya cyo ni investor ni ikibazo nticyumvikana. N'ikibazo nticyumvikana. Okay, reka tujye tugisubiremo. A life insurance arrangement which bypasses, ijambo bypasses ni nko avoiding insurable interest statutes is called a contract of adhesion, an indemnity contract, key person insurance, cyangwa investor originated life insurance. So cyanya cyo ni IOLI. Simbizi nyine ibyo bari kugereka hano ariko turebe. Bari kuvuga bati this type of arrangement involves investors purchasing life insurance on individuals, often without having a direct insurable interest in their lives, primarily for the purpose of profiting from the death benefit. So urumva ko making a sense, right? Ngo birakomeye. Client one ni amani. Client one. So rimwe na rimwe ibyo utumva uzajya ubimemoriza ubifata uko ugerageza no kubyiyumvisha. Numva nka gutyo ndabisobanuye ko like umuntu yakaba yabyumva, you know. Investor originated life insurance ni igihe umuntu ashaka kuba adafite insurable interest z'ako kanya ariko ashaka kubenefitinga just in case a key person, umuntu runaka bafitiye babaye insurance yitabye Imana. Dusubiye kuboroga. Yeah, sometimes you have to. Ariko the purpose of this ni ukugira ngo tubyumve. Nk'ubu barakubwira ngo the correct answer is investor originated life insurance cyangwa se bakunze kwita IOLI is used to circumvent states insurable interest statutes. This is done when an investor or a stranger persuades an individual to take out life insurance specifically for the purpose of selling the policy to the investor. The investor compensates the insured and makes the premium, then collects the death benefit when the insured dies. Wemerewe gufata life insurance ku muntu uwo ari we wese. Wowe ushobora kubona nka mama wawe cyangwa se nk'umuntu yisaziye akavuga ati rero uyu muntu kuba adashaka life insurance wowe ukayimufatira kugira ngo uzabone death benefit. Wenda ukavuga ati arashaje n'ubundi nta myaka ataranasigaje. Urumva ukamukubitiraho agatama aho ngaho ukazajya ukamwishyurira nyuma y'imyaka ingahe boom urumva so uri umeze nk'umu investor so noneho dukomeje ikibazo cya gatandatu in regards to representation or warranties which of these statements is true ngaho musome mumbwire icyambere kiravuga ngo warranties are statements considered to be true to the best of the applicant's belief if material to the risk false representation will void a policy. Representation are statements guaranteed to be true in every respect. In every respect. If material to the risk, false representation will not void a policy. So, murumva ari ikihe? Number 1, number 2. A. Okay. Katurebe. Uvuga ngo mu buzima ugomba gushaka uburyo ibintu byose uri gukora ushaka inzira zibyoroshye sibyo so niyo mpamvu dufite amatools niyo mpamvu dufite imodoka zidutwara vuba tutagenda n'amaguru cyangwa n'amagare urumva so ugomba gushaka uburyo woroshya ukora ibintu byawe vuba kuko speed iramataringa hari umuntu ushaka guheza ino course nka kubana agahita ayikora mu minsi 3 agahita ayirangiza akajya gukora ikizami ubundi akamaro kwezi bikamunanira akagira ubunebwe yavuga ngo birakomeye urumva so you have to be fast you have to be quick so hano bari kumbwira ngo the true statement regarding representation or warranty is if material to the risk false representation will void a policy. This means that if a representation made by the applicant is found to be false and is deemed material to the insurance risk, the insurer may have the right to void the policy. So, ni icya kabiri rero. Ariko I don't know. Reka ndebe. So the correct answer in insurance, false representation will void a policy if there are material to the risk. Umuntu iyo ari kwandika policy agomba gutanga amakuru yuzuye 100%. Otherwise, bishobora kuvoiding a policy. Ikibazo cya karindwi bakabaza bati which of the following consists of an offer, acceptance and consideration? This is representation, na? Cyangwa ni warrant?
Kada?
C, contract. Okay. Maybe. What's in there? So, ndiyanditse ngo C, Delhi. Okay. Delphi ko wajya uri gukope. Urimo urareba abandi banditse kandi bati ya C.
Oya nuko.
Muzajye munyarutsa. Niba ufite igisubizo ugahita cyandika vuba.
Ni cyose.
Yeah, reka ndebe. Bavuga ngo the option reka turebe contract. So, hano muri ChatGPT yanjye bari kumbwira ngo the option that consists an offer, acceptance and consideration is a contract. Noneho bigakomeza bakavuga ngo a contract is a legally binding agreement between parties that includes these essential elements, and an offer made by one party, acceptance of that offer by another, and consideration, something of value exchanged between parties. So ni
Urumva se?
kuba ari contract. Murabona ko ni contract. Ubu nuhura n'iki kibazo bahindura amagambo ugahita ubona ngo ni iki giconsistinze an offer, acceptance and a consideration, ubwo ni contract. So ikibazo cya munani kiragira giti which of the following consists.
Si kimwe se?
Nyine baba bashaka kukurwaza umutwe. Ndabona byenda gusa ariko reka turebe. C. Aha, nawe uri guhuzagurika. Contract. Yeah. Ndabona ari kimwe. Yeah. Bashaka kureba nimba uri serious.
Umva bikomeye ahubwo.
Yeah. So noneho proceed. Icya cyenda. Iki nacyo twakibonye, right?
What?
Twakibonye bakizanye mu bundi buryo. When must insurable interest be present in order for a life insurance policy to be valid? Ese twagikoze?
Yeah, C.
Iki ngiki kigomba kuba ari C. Ubwo utari kubona ko ari C, cyaba ari ikibazo gikomeye cyane ubwo.
We tudekuraja se sha.
Reka noneho ndebe.
Usanga twinyuzemo.
Okay. Hano bari kumbwira ngo yeah, when the policy is made. Ngicyo kirumvikana ndumva nanjye ndacyumva noneho. Noneho dukomeje ku kibazo cya 10 kirabaza ngo insurance policies are considered aleatory contract because they are take it or leave it, right? Sibyo? Cyangwa ndi kwinyuramo nawe. Aho numva ashaka batanze kubona igisubizo kandi ari ngo muri kwiga. C. Aravuze ngo C. Performance. Are you sure? Okay, let's turebe.
Aleatory ni ukuvuga iki se?
Aleatory nyine ni cya kintu kiba kiri
Aleatoire.
aleatorale ni cya kintu cya
Oh my God.
ibintu by'amahanga twajemo tuzabishobora.
Atari.
So, insurance policies are considered to be aleatory contract because performance is conditioned upon a future occurrence. So, what do I want to say? C yagikoze. Birashoboka ko yagikoze. This means that the obligation of the parties depend on an uncertain event. Events zitazwi, ni ukuvuga ngo we don't know what the future holds, such as occurrence of an insured event, a loss or death, making the contract inherently unequal in terms of exchange of value. So aleatory mu by'ukuri wa mama yari yabivuze kare ni ikintu ufata mu by'ukuri exchange yacyo ikaba ishobora kuba bitangana nyine. Icyo utanze nk'urugero umuntu atanze amadolari 200 cyangwa 500 yitabye Imana cyangwa arwaye bakaba bamuhereza whatever izo miliyoni n'ibiki byose. So hano rero baravuga ngo aleatory refers to a type of contract where the outcome is dependent on uncertain event. Wabyumvishe wabaje aleatory?
Yeah.
Ubwo nizere ko twabyumvisha aleatory icyo bivuze. Okay. ubwo nyine abana nabo barize. Uh, which of these is considered a statement that is assured to be true in every respect? Sisi twakibonye na? Niki kitunanira se? Turebe wanditse hano. B. Urabona ko uyu munyeshuri ni mwiza niwe uri gusubiza wenyine. Delphine, urabona nawe subiza.
Reka ninyuremo C.
Oya, subiza bya nyabyo n'ubundi igisubizo cya nyacyo urakizi. Ni B.
Warranty.
Ntabwo wibuka ko warranty twakibonye iki ngiki nk'inshuro ebyiri zindi.
Ntabwo nari nazi.
Bivuze ngo iki kibazo gishobora kuba kiza mu kizami cyane. Kuko they ask it a lot. Warranty ni statement.
Warranty.
Igomba kuba considered iri guaranteed yuko igomba kuba iri true. In every aspect.
Okay.
Iki se twakibonye koko?
Ya, twakibonye.
Ni ikihe Delphine?
Cya nyuma C.
Are you sure?
Ya.
Okay. Urabona ko babuze n'ibibazo batubaza bari kugarura. Life and health insurance policies are multilateral contract, bilateral contract, unilateral contract, non-lateral contract. Huh?
C.
C. Okay. Umwe yavuze B, undi avuze C. Katurebe. Kamaramaka. Neze ko mwashatse ko tuzatwiga amachapter abiri. Dukomeze amachapter abiri nta ribe.
Iya mbere turayirangije se?
So, ni C. Unilateral.
Wow.
Delphine, ni ukuvuga ngo undi yavuze ngo ni A.
Nasoma.
Aravuze ngo ni A. Ya. Multilateral. Unilateral bivuze ko iba iri ku ruhande rumwe. Ni wowe murwayi, wowe muntu, wowe ufite polisi bakugomba ibyo bakugomba hagize ikiba. Ariko wowe ntacyo bagomba kuko nta promise yigeze ubahereza usibye kwishyura utwo dufaranga twa buri kwezi. So, baravuga ngo correct answer ni life and health insurance policy are considered unilateral contracts because one party makes a promise and the other party can only accept by performance. So uni ni nkaho bivuze rimwe. Biri one sided. Ikibazo cya 14 kirabaza ngo which of these is not a type of agent authority? So muri kwiga kugira ngo mubone ama license mu baba agent, mu baba producer, whatever, cyangwa se professionnel de financier. Mwabuze ngo C. Principal, apparent, express. Ariko numva principal. Numva wa mukobwa yabivuze kare ishaka kuba ari principal. You might be right. Bishobora kuba ari byo. Kuko wa mama yavuze ngo ibi bitatu nibyo yavuze hejuru. Principal ntabwo yayisizemo. Sibyo future professionnel financier. So, hano baravuga ngo ni principle ya. So, ubwo principle kije tubimenya ko ari uko nguko bimeze. Ikibazo cya nyuma sasa kirakomeye. Ikibazo ni uko ari F gusa. Iki kinakibuka umwaka urashize urarenga ariko ndakibuka. Ariko reka tugisome twumve. Umuntu witwa ubwo abakiriya barabayumva. Na
Yes.
F, ubwo ni Francine cyangwa Francis. Our business partner, bafite business bakora bahuje imitungo. Each takes out a $500,000 life insurance policy on the other. Umwe agafata ku wundi, undi agafata ku wundi, akayifatira undi. Naming himself
bivuze ko
primary beneficiary.
uvuze ngo umwe ayifatira ku wundi uwundi akayifatira ku wundi, bivuze ko umwe apfuye
undi yigize umu beneficiary.
Okay, gotcha.
Wayifashe yigize umu beneficiary. Ari kubetinga nyine ku buzima bw'undi. Noneho E and F eventually terminates their business. Business bakoranaga bivamo nimba barahombye, niba byaragenze bite ntabwo tubizi. Okay, makuru aritanganije avuga ngo ni A, ariko se birasi yakopera
yakopeye nyine taramva n'ikibazo.
nuko nabivuze. And 4 months later E, ntabwo ari E, ni Eric cyangwa whatever. E dies, ahita yitaba Imana. Although E was married with 3 children at the time of the death, the primary beneficiary is still F. However, an insurable interest no longer exists kuko bataminating the business bakorana. Where will the proceeds from E's life insurance policy be directed to? Bizajya kwandi ku muryango we, kuri estate yo muri living trust, cyangwa bizajya kuri wa muntu bakoranaga wamwibye business bakayifunga. Ubwo isubizo
ishobora kuba ari F, ariko none se bamuha iyo ngiyo kubera iki kandi wumva yarabaye
kubera ko F yafashe polisi ayifatira E.
Ibyo nabyumvise.
Yangije yigira umu beneficiary.
Yes, ibyo nabyumvise, ariko yabaye
business yabo barayirangiza. Uribuka ko insurable interest igomba kuba ihari mu gihe uri ku applica polisi gusa, ntabwo ari ngombwa ngo ikomeze ibaho ubuzima bwose. Banabivuze hano. Baravuze ngo however an insurable interest is no longer exist. Uyu yibagiwe kuneminga mu beneficiary, cyangwa se ntabwo yari afite uburenganzira kuko ubundi owner wa polisi niwe ufite uburenganzira, niwe uri owner, niwe uhindura ibintu byose. So iyi ni yita Imana F ahita agira, kuko F rega ni nawe wishyuye no polisi yose. Urumva? Rero nawe nimba ubona nimba ushaka hari nk'umuntu ubona bati uyu muntu rwose ni umusaza arakennye, ariko n'ubundi ni time yakita Imana akaba byibura yabona polisi, wanayimufatira, noneho umuryango ukazabona ayo mafaranga, n'umuryango ukaba wawufasha muri ubwo buryo, cyangwa se n'iwanyu papa mama ibintu nk'ibyo batuye hano muri Amerika. Ariko ibyo dukora ryo muri Amerika ibindi ntabwo tubizi. So urabona ko turi abanyeshuri beza, twagize 100%.
Akurahiye.
Urabona bitoroshye se? None iyo muvuga ngo birakomeye mwamwishingikirije amashifts.
Tugiye kuya kangahe se Abdul?
Ntabwo muri aru hasi dukomeze chapter ya 3. Saba kumenyera. Okay, muri tayari dukomeze chapter ya 3.
Komeza yego.
Ni ndende ifite ibibazo, ifite exam ebyiri. Muri short again.
Ko batavuga abandi je nta kibazo.
Go ahead.
Twagiye rero chapitre ya 3. Naka break man.
Okay, reka tukore break no buzz.
Oya, reka dukomeze, twagiye sasa.
Okay.
Intro video. Hey.
This section will introduce you to the different type of life insurance policies, provisions, options, and riders. In this section, you will learn about the different type of life insurance policies, the rights of ownership, the different type of policy provisions, what can be excluded from a policy, non-forfeiture values, dividends, and the different type of policy riders. In this section, pay special attention to the following key topics: term life, whole life, special use policies, variable products, entire contract provision, insuring clause, free look provision, consideration clause, grace period provision, reinstatement provision, policy loan provision, incontestable clause, absolute assignment, collateral assignment, suicide provision, misstatement of age or sex provision, automatic premium loan provision, exclusions, non-forfeiture options, dividend options, waiver of premium rider, automatic premium loan rider, payer provision rider, and the cost of living rider.
Okay. Nabyumvishe.
Mm.
Nabyumvishe. Tujye gukora ikizami.
Mu buzima.
Muri tumamagara umuntu umwe hano, hari umuntu wambuze. Kamuhamagare gatoya, kamyutinge hano. Twakomeje. Okay. Tugiye kuri bya binote. Types of insurance policies. Ni zingahe hari? Njyewe izo nzi ni enye. Ariko hashobora kuba hariho nyinshi. Life insurance policies. Hey,
Mu buzima. Ni iki tureba?
ni byinshi cyane. Ni byinshi cyane. Ni byinshi cyane. Family, adjustable, ererere. So ibi bintu umuntu ushaka kubisoma ni page 32 yabisoma
Ntabwo
kabiri.
ntabwo tubishaka.
Ego ko yes. Nawe client one ni inde koko bana yanjye. Client one wavuze nkakumenya. Ni amana ariko ko byagenda ko.
Umukiriya wa mbere.
Nta kibazo reka tumwemere. Noneho turebe options and riders. Yes, niwe. Okay, nari mbizi. I know. Okay. Ibi nabyo ni page 51. Umuntu ufite masters na doctora muri mwebwe agenda bisome kuko nibo bantu bakunda kwiga. Ariko ngewe reka ntabwo nabagira inama yo kubigira. Muzajye ni ukubyumva ugakoresha chat GPT ukikomereza men. Ko nibi bintu twebwe se baba agent bayimazemo igihe kugira ngo tuzi binganiye. Ni kugira ngo bakurushye.
You have now learned the key concepts of policies, provisions, options, and riders. Let's review some of the key areas from this section
Tumaze kubyiga se?
Cyane.
Aho reka tureviewing.
that will help you prepare to pass. Term life. Term life insurance is temporary life insurance provided for a specific period of time. It is also known as pure life insurance. Term insurance is temporary protection because it only provides coverage for a specific period of time. Policies provide for the greatest amount of coverage for the lowest premiums. Term insurance provides what is known as pure death protection. The policies that remain in effect to age 100 as long as the premium is paid. Whole life insurance provides lifetime protection and includes a savings element known as cash value. Whole life policies endow at age 100, which means the cash value created by the payment of premiums is scheduled to equal the face amount of the policy at age 100. Premiums for whole life policies usually are higher than those for term insurance. The following are key characteristics of whole life insurance. Level premiums. The level premiums for whole life policies are based on the age of the individual when originally purchased. Therefore, the premiums remain the same throughout the entire life of the policy. Level death benefit. The death benefit is guaranteed and remains level for the entire lifetime of the policy. Cash value. The cash value created by the accumulation of premiums is scheduled to equal the face amount of the policy when the insured reaches age 100. Living benefits. With a whole life policy, a policy owner can borrow against the cash value while the policy is in effect, or can receive the cash value when the policy is surrendered. Cash value is also referred to as non-forfeiture values. The three basic types of whole life insurance are straight whole life, limited pay whole life, and single premium whole life. Straight whole life, also called continuous premium whole life, is a basic whole life policy where the policy owner pays a fixed premium for the time the policy is issued until the insured's death or age 100. Limited pay whole life. Unlike straight life, limited pay life is designed so that the premiums for the coverage will be completely paid up well before age 100. Most versions of limited pay life are 20-year pay, whereby coverage is completely paid for in 20 years. Or life paid up at 65, whereby the coverage is completely paid up by the insured at age 65. Single premium whole life. With a single premium whole life, a one-time lump sum payment is made, which will provide a level death benefit to the insured at age 100. The policy is completely paid up and will generate cash value immediately. Rights of ownership. The assignment provision specifies the policy owner's right to transfer ownership of the policy. There are two types of policy assignments. Absolute assignment. Absolute assignment involves transferring all rights of ownership to another person or entity. It is a permanent and total transfer of all the policy rights. The new policy does not need to have an insurable interest in the insured. Collateral assignment. Collateral assignment involves a transfer of partial rights to another person. This is usually done in order to secure a loan. A collateral assignment is a temporary assignment. Once the debtor loan is repaid, the rights are returned to the policy owner. Standard policy provisions. While there is not a set standard of policy provisions in life insurance, the standard policy provisions adopted by the NAIC, National Association of Insurance Commissioners, does create uniformity amongst life insurance policies. Entire contract provision. The entire contract provision stipulates that the policy and a copy of the application, along with any riders or amendments, make up the entire contract. Insuring clause. The insuring clause is the company's agreement and promise to pay the death benefit. Consideration clause. The consideration clause is the policy owner's promise to make premium payments. Free look provision. The free look provision allows the policy owner a free look at the policy for a specific number of days. The free look period starts when the policy owner receives the policy from the insurance company in the mail or is delivered by an insurance agent. Grace period provision. The grace period is the period of time after the premium payment is due. The grace period is usually 30 days. The purpose of the grace period is to protect the policyholder against an unintentional lapse of the policy. If the insured dies during this period, the benefit is payable. However, any past due premiums will be deducted from the death benefit. Reinstatement provision. The reinstatement provision allows a lapsed policy to be put back in force. If the policy owner elects to reinstate the policy, they will have to provide evidence of insurability, pay all back premiums with interest, and may be required to repay any outstanding loans. Policy loan provision. The policy loan provision is found only in policies that contain cash value. The policy owner is allowed to borrow an amount equal to the available cash value. If there are any outstanding loans at the time of the insured's death, the death benefit will be reduced by the amount of the outstanding loan. Incontestable clause. The incontestable clause prevents the insurance company from denying a claim because of incorrect information or a concealment of facts after the policy has been enforced for 2 years. Suicide provision. The suicide provision of a life insurance policy protects insurance companies against people using suicide for a quick payment of the death benefit. If the insured commits suicide within the first 2 years, the insurance company will not pay the death benefit. They will only return the premiums that have been paid. Misstatement of age or sex provision. Because the age and sex are important factors in figuring the premiums that will be charged for a life insurance policy, this provision allows the insurance company to adjust the policy at any time due to a misstatement of age or gender. In the event of a claim, the insurance company is allowed to adjust the death benefit or the premium to correct the age or gender. Automatic premium loan provision. The automatic premium loan provision is commonly added to contracts with cash value at no additional charge. This is a special type of loan that prevents the unintentional lapse of a policy due to the non-payment of premiums. For example, if a policy owner misses a premium payment, the payment is automatically paid using the policy's cash value. Exclusions. Exclusions are the types of risks that an insurance policy will not cover. The most common exclusions found in life insurance policies are war, aviation, non-commercial pilot, hazardous occupation or hobbies, commission of a felony, and suicide. Non-forfeiture options. Because permanent whole life insurance policies have cash values, certain guarantees are built into the policy that cannot be forfeited by the policy owner. So basically, if a whole life policy has cash value and the policy owner wants to surrender the policy because he does not want it anymore, he must make a decision on what he would like to do with his cash value. The 3 options are cash surrender, reduce paid up, or extended term. Cash surrender option. Very simple. Take the cash. Reduce paid up option. Under this option, the cash value is used to purchase a paid up whole life policy. The new whole life policy will have a smaller or reduced face amount from the original policy, but there will not be any more premium payments due, and it will continue to gain cash value. Extended term option. Under this option, the cash value is used to purchase a term policy. The new term policy will have the same face value amount as the original whole life policy and will last for a set period of time based on the amount the cash value available used. And there will not be any additional premium payments due. Dividends. Dividends are paid only on participating policies. When the policy owner purchases the policy from a participating insurance company, they are eligible to receive dividends. When receiving dividends, they have the following 5 options. Take dividends in cash, apply dividends against premium payments, allow dividends to accumulate interest, buy paid up additions, which is a whole life policy, and purchase 1-year term insurance. Policy riders. Policy riders are added to a policy and ride along on the basic life insurance policy. Riders only have value when attached to a policy. They have no independent value. They are added to help people customize their insurance policies for their individual needs. Unlike policy provisions, policy riders are not free. Their cost is added to the life insurance policy premium. Guaranteed insurability rider. The guaranteed insurability rider allows the insured to purchase additional coverage at specific future dates without the evidence of insurability. The new premiums will be calculated only on the person's attained age. Waiver of premium rider. The waiver of premium rider waives the premium for the policy if the insured becomes totally disabled. Most insurance companies impose a 6-month waiting period from the time of disability. The coverage remains in force until the insured is able to work. If the insured is never able to return to work, the premiums will continue to be waived by the insurance company. The waiver of premium rider usually expires when the insured reaches age 65. Cost of living rider. The cost of living rider addresses inflation by automatically increasing the amount of insurance without evidence of insurability. The face value of the policy may increase by the cost of living factor tied to an inflation index, such as the Consumer Price Index. Fully understanding these key topics are essential as you prepare to pass.
Abyumvishe nta kindi njye narenzaho kabisa. Iminota 13 barabasobanurira ibintu byose. Ubwo rero tugiye kuki? So tujya ku kizami. Muracyari mbese? Ndeba abantu bahari 6.
urahari
Okay. Ibibazo 20. Twagiye sasa. Ikibazo cya mbere kirabaza ngo if a 10-year term life policy contains a renewability provision, the policy will renew along with the decrease in premium at the option of the insurer, only with evidence of insurability, without evidence of insurability. Murumva ari ikihe? Uko ashaka ngo muhamagarira numva icyo nshakira. Sorry about that. So hari abavuze ngo nta n'umwe uratanga igisubizo. Ayaya. Byabananiye. Byabananiye.
Okay, C. No,
Si?
no, no, no. D.
Kubera ko kopeye, reka turebe nimba hari uwabivuze.
D.
Okay, hari abavuze C, hari abavuze D. Nta wundi ufite igisubizo turebe. Ariko nanjye ndi kumva yaba ari C. So turebe hano baravuga ngo yeah, without evidence of insurability. So bishobora kuba ari D.
Yes, ureba se.
Noneho yagikoze turamukizwa ni.
Murapfuye.
Baravuga ngo renew without an evidence of insurability. This means at the end of the term, the policy holder has the right to renew the policy for another term without needing to provide proof of health insurance. Kubera ko bafite renewability.
Basanzwe.
Kubera ko bafite insurability, yeah, that's good. So, ndumva ari sawa. Ubwo twacyumvishe twese. Rero dukomeze vuba vuba. Ikibazo cya kabiri kirabaza ngo ku bana is looking to purchase renewable term insurance. Which of these types of term insurance may be renewable? Increasing, level, adjustable, decreasing. Igisubizo ni ikihe?
Adjustable. C.
Adjustable. Igomba kuba iri adjustable.
Kuko abasanzwe arimo, right? No kuri renewing.
Okay, hari abavuze D. Hari n'uvuze ngo adjustable C. Katurebe. Iyi ntambara ni urayitsinda sasa. Yeah. So igomba kuba ari level. Baravuga ngo all type of term insurance can potentially have a renewable feature, but the most common type that typically offer renewability are level term insurance.
Okay.
Level term insurance maintains the same death benefit and premium for the duration of the initial term and usually includes a renewability option, blah, 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 increasing, So reka duhitemo level turebe.
Uri kubisoma he ariko?
Ngende umuhanga nzi ubwenge.
Okay, tubwire natwe tubure abanyabwenge.
Hano mu mutwe. Which policy requires an agent to register with the National Association of Security Dealers, NASD, before selling? So this is variable. Ni kubisoma kuri chat GPT. Back? Wicara ngo dusubire inyuma. Ntabwo wabyumvise? Uraza kujya kuri YouTube urebe video. Kande like and subscribe. Sibyo? Okay. So iki rero kiravuga ngo ndi gusoma kuri chat GPT na ni Delphi. Iki rero ni variable life bari kwaringa ko umu agent registeringa n'iyi national NASD whatever ibintu nk'ibyo. Nabyumvishe?
Iyo case ibaza iki kwanza ngo which the policy requires an agent
An
to
agent to register with National Association of Security Dealers before selling. Ni variable life. Kugira ngo because of the transfer of investment risk from the insurer to the policy owner, variable insurance products are considered securities contract as well as insurance contract. So di kumwe na stock na insurance. Uvuga ngo biba biri variable nyine. So ikindi barabaza ngo kongeraho na life policy offers the owner's investment in products such as money market funds, long-term bonds, and equities. Ni iyihe muri izi rero? Ni iyihe? Variable, ni universal.
C.
Is it C?
I don't know.
Ni IUL. IUL. Okay, katurebe. Baravuga ngo ni variable hano. A variable life policy offers the owner investment in products such as money market fund or whatever you need. So, variable. A variable life policy offers the owner investment in products such as money market fund, long-term bonds, and equities. So, ufite uburenganzira muri variable. Noneho iki barabaza ngo which of the following types of policies pays a benefit if insured goes blind? So si ADD ndacyibuka. Nari narakaborotse. Delphi, wowe urumva
urakaborotse nyine ahubwo ADD ni iki?
ADD, ngo nyine ni ADD. Ni ibintu by'aba blind man. Iyo mwishe abantu b'abazungu bavuga ngo barwaye ngo ari HDD, niba ari ibiki?
Ewe twaje kugwa hano ndakurahiye.
HDIS, so bavuga ngo an accidental death, dismemberment. Abazungu nabo bakomeje ubuzima. ADD nicyo bivuze, wabyumvishe?
Ayibonye.
Provide benefits if an insured is killed. Bamukase, bamwishe. Loses a limb. Ubwo iyo limb nyine ntabwo mbizi mu cyongereza, ushobora gusanga ari nk'ukuguru. Cyangwa se suffers blindness.
Nice. I covered it.
Impumyi nyine. Cyangwa abaye pararize in a covered accident. Nabyumvishe? Ikindi kibazo barabaza ngo when is the first amount of a whole life policy paid?
C.
So si hano na?
B.
Ukwita Imana gusa. When the insured dies or at the policy maturity date. Whichever happens first.
Nkeka ari B sinzi.
Ni B. Birashoboka ariko se maturity date bivuze ikira? Ubwo se imyaka 100 igeze barayimuhereza ngo nuko yagejeje ku myaka 100. Atari yapfa.
Ntabwo mbizi.
Kandi ariwe munyeshuri.
Umwarimu niwe wabwiza kumenya byose.
ni B. Ni B. Bivuze ngo the first amount of a whole life policy is paid when the insured dies or at the policy's maturity date, whichever happens first. This means that if the insured passes away before the maturity date, the beneficiaries receives the first amount. If the insured is still alive when the policy matures, they will receive the first amount at that time.
Mana we
Iyo umuntu agize imyaka ijana ahita ayabona.
bakayakoresha iki se?
akayahereza abuzukuruza be.
Ayiwe
ntabwo bayatanga umuntu afite se 75.
reka imyaka ijana whole life se si imyaka ijana nibwo iba macuwa 75 uba ukiri umwana man.
What type of life insurance are
What type of life insurance are credit policies issued as? Credit policies. Aha, turebe. Tubaze Elon Musk.
ugiye kubaza hajya ako kantu ubaza ntabwo umuntu yakajyana muri examen akayikoresha.
Baza Nathan.
Oh, nigeze gukora iki examini
Mm.
nta telefone bakwemera ko nta na kimwe
Reka da.
nta na kimwe ugenda ujanye
baragusaka.
baragusaka
Oh my God.
mengo wishe umuntu.
Kuko Imana.
Yeah, iki rero ni What type of life insurance are credit policies issued as? Term life insurance. So baravuga ngo the type of insurance used is decreasing term with the term matched to the length of the loan period though usually limited to 10 years or less, and the decreasing insurance amount matched to the declining loan balance. Ndakeka mwabyumvishe ni icyongereza cyoroshye cyumvikana. What type of life insurance gives the greatest amount of coverage for a limited period of time? Yeah.
Ayayayaya. Iyo bari bira B by faith.
Itanga in a limited. For
Yes.
limited. Katurebe. Baravuga ngo term life. Urabona harimo
Term life
limited.
limited.
Limited biba biri limited. Sibyo ra?
Term life.
Turebe wasizemo hano. Client one ahora ari on spot. 9 bari kubaza ngo which of the following action require a policy owner to provide proof of insurability in an adjustable life policy? Increase face amount, decrease face amount, increase premium paying period, decrease premium payment. Urumva ari iki ko bicanganye? Ibi bisaba kumva. So muri text mbonye hano bari kuvuga ngo in an adjustable life policy, the action that requires the policy owner to provide proof of insurability is to increase the face amount. This is because increasing the coverage may involve high risk, and the insurer needs to assess the policy owner's current health status and insurability before approving the increase. Decreasing the face amount, increasing the premium paying period, or decreasing premium payments typically do not require proof of insurability. Nyine usabye ko bakongerera coverage yawe, umva bahita bavuga ati hey, twereke indi proof, ni ukubera icyo ushaka kuyongera, ese ni ukubera ko ubonye ko kakubayeho, ibintu nk'ibyo. All of these actions can be taken by a policy owner without proof of insurability except increasing a face amount. Mwabyumvishe?
Mm.
Ikindi kikabaza ngo what advantage does a renewability feature give to a term policy? The insured may extend the coverage period with no additional cost. The insured may apply for this policy with the little to no underwriting. The insured may borrow against the cash value. The insured may extend the coverage period. Umva ari iki? Umva iki ngiki twakibonye ka? Yuko bongera uko babishatse. Aza si icya mbere, ha? Turebe. Ko numva byose ari byo. Okay. So the insured may extend the coverage period. Ngo ni hano. Cyanyuma. The advantage of renewability features gives to the insured it is it allow oh my features gives to the insured is it allows him her to extend the coverage period. Usually a premium increases is involved upon renewal. So aremerewe kuyongera period. Cya 11 kirabaza ngo variable life products requires a producer too. So sikira agomba kuba afite securities, right? Ko bizama n'amastock n'amabond n'ibiki byose. I'm guessing. Urabona ko
none se
hmm?
none se umuntu yongeye agasubiramo kuva utangiye
Hmm.
questionnaire arahinduka cyangwa se bakomeza bazana ayangaya tubiboroke gute
Birahinduka.
ayiwe data we usiba ibintu tuzabirangiza cyangwa umuntu yabiboroka njya bakazana ibingibi nyine umuntu akabiboro akicara akabiboroka
Umva ye.
Messi.
Ngiye ko nabirangije nkurusha nta na kimwe. Kandi nta n'ibyo nkibuka. Ubwo rero nawe wabikora.
Okay.
In order to sell a life policy, a producer is required to register with Financial Industry Regulated FINRA, Financial Rwanda Association.
ati Rwanda
You need
niyo bari
FINRA ntabwo iba mu Rwanda ra? Turebe. Iki ngiki rero ndi kumva wagira ngo ni variable tu, kuko niyo bakunda kugira. Yeah, in order to
Yes.
sell a variable, ugomba kuba ugize waregistarinze na Financial Industry Regulatory Authority. Mwabyumvishe? Cya 11 kirabaza ngo which statement is true regarding a variable whole life policy? A variable whole life policy. A minimum guaranteed death benefit is provided. It is a combination of endowment, increasing term. Its premiums and benefits are variable. It has guaranteed benefit dividends. Ni si niki.
niyo bari
Yaba ari A, minimum. Kubera icyo uvuze A?
ngira ni koke minimum guarantee
So the true statement regarding a variable whole life policy, its premiums and benefits are variable. So singibi koko bagukopeje biranakuraniye. Variable.
Yeah, very.
Nanjye ndakizi.
Oh, urabyise nawe.
Nagitoyera.
It's a minimum guaranteed
Is it?
provided. I know. Variable yawe irakuyobeye.
Usige.
Variable iramuyobeye. Variable.
Bagukopeje irakunaniye nanjye ndabyishe urabikoze wese isi. Okay, ubwo
It's a
igisubizo
minimum.
cyanjye cyo ni iki rero?
Yeah,
The
minimum
correct answer
guaranteed.
is a minimum guaranteed death benefit is provided. A variable whole life policy provides a minimum guaranteed death benefit. So, nabyumvishe. Ubwo iki nicyo cyose cya mbere nishe bivuze ngo ntangiye kunanira. Ubwenge bwanjye bwagize. Ariko nta kibazo. Ikindi kibazo cya cumi
Bibaho.
barabajije ngo at what point does a whole life insurance policy endow? Endow se bivuze iki noneho mwana?
So,
Endow bivuze iki?
ngira ngo irangire.
Irangira?
Hope so. I don't know.
Hano banditse ngo a whole life insurance policy endows when the cash value equals the death benefit. Ubundi aho ngaho kaba kabaye. This typically occurs at specific age, often around 100. But the definition factor is that the cash value accumulates to match the death benefit amounts. So it's C. Nubona equal death benefit na cash value. Premium paid na death benefit ariko reka ndebe mbanza ndebe ko ari cyo ntapagura. Correct. A whole life insurance policy endows when the cash value ingana na death benefit.
Indobo no kuvuga iki se?
Indow nyine
Ni indobo.
Ni endi ni iki?
Indow rero ni icyongereza
N'ubundi.
bivuze ngo
Mm.
in the context biba muri life insurance gusa ni amaterminology ya life insurance. In the context of life insurance, endow refers to the point at which the cash value
Mm.
of the whole life insurance policy equals the death benefit. When a policy endows, the insurer pays the policyholder the face value at the policy, typically at specific age such as age 100. At this point, the policy no longer provides life insurance coverage as full benefit has been paid out. N'ubundi ku myaka 100 uwo muntu aba yarayatanze yose. Ni nkaho aba yarayishyuye yarayagejejemo. Ariko indow mu cyongereza ubundi bivuze iki bisanzwe. Definition. Bahita bazana life insurance nayo. No, life insurance ni ururimi. Which of the following types of term life policy most likely contains a renewable future? Increasing term, 10-year convertible, decreasing variable. Gusa si abari murumva yabari ikira. Ndeka kuvuga igisubizo ntabakopeza. D, aravuze D. Variable. Are you sure?
C.
C. Decreasing. Okay. Turebe. Baravuga ngo the type of 10-year convertible term. 10-year convertible term policy. This type of policy often allows the insured to renew the coverage without without biri kwanga kabisa without okay byacecetse yeah so ubwo rero igisubizo ni 10 year convertible term kubera ko containing renewability provision urumva 10 year convertible term nyine ushobora kuyiconverting sibyo ni nk'aya modoka ukanda buto igahita yikuraho ibintu igahita ibisubiza noneho ikibazo cya 16 kiravuga ngo which of these statements describe a modified endowment contract make and easy too falls below the minimum amount of premium that can be paid into a policy and still have it recognized as life insurance contract exceeds exceed the maximum amount of premium that can be paid into a policy and still have it recognized as life insurance contract. 7-pay test used to determine the minimum death benefit of policy, the maximum. So, what do you know exceed it to? Let's endeavor B. Okay. B pay. Let's turebe. Hano barimo baravuga exceed. Urumva uzajya ubona make modified endowment contract ni ibintu biba byexceedings nka 7-pay wa maximije policy yawe ugashyiramo menshi bihita biba modified endowment so ntabwo ari byiza bituma umuntu yishyura amatax kuko yarengeje kandi baraje babidusomere hano policies that do not meet the 7-pay test are considered make and will lose favorable tax treatment. Why won't tax treatment? The test is designed to discourage premium schedules that would result in paid up kuimaximiza cyane policy before the end of 7-year period. Wako nyine ushyiramo ibifaranga byinshi uri umukire ukazajya bikubyarira inyungu tu. So, variable whole life insurance can be described as Cecilia. Kingiki ntabwo nirirwa mbaza na sogokuru wanjye. Ndumva cyaba ari iki. Yeah, I'm confident. Variable birimo insurance na securities ibintu by'amastock amabond n'ibiki byose biri combine. Nta kibazo rero. K kubana pays on a 20,000 year 20-year endowment policy for 10 years and dies from an automobile accident, a car accident. Automobile ni ukugira ngo abazungu babikaze babigire intambara ariko mu by'ukuri it's a car accident. How much will the insurance company pay the beneficiary? Nangahe bazabahereza
C.
afite ngo ya endowment policy plus interest nazo interest kuki baze Nyabingi watuzanye muri Amerika ugomba dusubiza n'ibibazo. Okay. Yeah. Bahita batanga nyiri 20 kuko niyo policy yari ihari sibyo? In a lump sum bahita batanga yose ko yuzuye tax free kuri beneficiary wari wese uhari. kuko umuntu yitaba Imana. So, which provision allows the policy owner to change a term life policy to a permanent one without providing proof of good health, modification, conversion, exchange, adjustable? Urumva ari ibi?
B.
Conversion cyangwa ki?
B.
Ya, nanjye numva gukonvertisa ari ibintu byumvikana. D, hari umuntu wavuze ngo D, adjustable, why adjusting? So baravuze ngo ni conversion, number 2, ni kuyiconvertisa. The conversion provision allows the policy owner to change the policy to a permanent life policy without providing evidence of durability. Ikindi cya 20 cya nyuma na nyuma baravuga ngo bati, what kind of life policy either pays the first value upon the death of the insured or when the insured reaches 100? Sisi tubizi da?
Turakizi icyo ngicyo.
Umuntu cyananira rwose n'ikizamini ntabwo yazagitsinda. Nabuze amanota 5. Ikibazo kimwe cy'amanota.
kubera iki wenyine wabuza twese twabuze 5?
Ya twese.
No, ni
Twese.
Bose.
Nta kibazo.
Ai,
Noneho Delphine, ni wowe ugiye gukora chapter ya 2 noneho kugira ngo twese biba biri kumwe. Sibyo Delphine? Ngaho twigisha. Chapter ya 2 nabyo ni ibibazo 20.
ego koko turabirangiza twamaze kunanirwa.
Si wowe wavuze ngo dukomeze?
None se iyi chapter ya 2 ntitwayikomezeje?
Iyi ni chapter ya gatatu.
Examen ya 2.
Iyi ni chapter ya 3. Kubera rero twiyemeje kubirangiza, tugomba kubirangiza. Ni nyine ni mwebwe mwavuze ngo tuzadukora chapter 2 ubwo nyine. You know.
Okay.
Tugomba kubirangiza.
Yeah.
Iyo umuntu atangiye ikintu ntakirangize bamwita iki?
Igwari. Sawa reka nitabe nanjye da. Sawa dukomeze.
So L takes out a life insurance policy and dies 10 years later. During the claim process, the insurer discovers that L had understated her age on application under misstatement of age provision. The insurer will what? Azishyura? Azadenyinga?
Turicaye iko ntacyo gukora cyangwa nibwo mwabibuze.
Iyi video ya YouTube mukazajya mukina.
Musi ntayihari. Oya iki. Ndapfa kwa
Thierry, uzi ko iyi ngiyi ari YouTube subscribe? Wowe ukaza uvuga ibintu bya YouTube kandi turi gukora amafaranga kuri YouTube. Sibyo Delphine? Ubu ngubu ma views 2 bazampa amadolari angahe? Okay. Adjust the death benefit. Amount. So ngibi hano. Baza adjust the death benefit to a reduced amount. Bazamuhereza nyine reduced amount. Bitewe n'utwo yasizemo ari twamusubiza gusa kuko yabeshye imyaka. Mwabyumvishe? Ikindi gikurikiyeho kirabaza ngo which of the following provisions guarantees the premium will be waived if a juvenile life. Juvenile n'umwana muto uri munsi y'imyaka 18 w'umujuvenile nyine. Noneho policy owner becomes disabled. Family maintenance pair clause. Zisi pair uwishyura baramuwevingira this. uzi ko iyo umubyeyi w'umwana agize ikibazo gituma atishyura umwana polisi ye bakomeza bakayikorera bakayishyura we nuko ukuntu ari abana beza pair clause mwabibonye icya gatatu kirabaza ngo what provision in life insurance policy states that the application is considered part of contract entire contract provision. Let me see. Urabona ko kwiga buhoro biratinda nyine, so mwaba mushaka uburyo nawe mwiga vuba vuba. Entire contract provision. Furthermore, the entire contract provision found at the beginning of the policy states that the policy documents, the application which is attached to the policy, and any attached riders constitute the entire contract. Ikindi bakabaza ngo the consideration clause in the life insurance contract contains the pertinent information. Okay. Twagiye noneho kugira ngo tubikore vuba vuba, ndabizi mwananiwe ariko reka tubirangize. So twagiye hano bari kuvuga ngo ni amount of premium due that are due, amount of premium payment when they are due, consideration in consideration clause. Policy specifies the amount and frequency of premium payments that the policy owner must make to keep the insurance in force. Nyine makeya ashoboka. Bakabaza ngo which of these action is taken when the policy owner uses a life insurance policy as a collateral for a bank loan? Hey, I'm a loan is us. Revocable assignment, irrevocable. Bishobora kuba iri atavuga ngo ni collateral na hano babivuze. A policy owner using life insurance policy as a collateral for a bank loan normally would make a collateral assignment. And which of these types of life insurance allows the policy owner to have a level premiums and to also choose from a selection of investment options? So this is why you want, you know? Turebe hano variable muri ibi bintu mbizi ko yabaye variable kabisa. Variable life, yeah. Ahantu uzajya ubona variable uzajya umenya ko most likely ni variable. S has a whole life policy with permanent payment due soon. Which provision would keep the policy in the in force? Does if S does not make the required payment and the policy has an adequate cash from which the premium can be taken from. It's a grace period, this. Sibira? Nibyo nyama. Nabyishe. Automatic loan policy. The automatic loan provision will keep the policy, the whole life policy in force and required blah 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 if it's not made. Yeah, okay. Nabyumvishe automatic. P is blinded in an industrial accident. Which provision of his life insurance policy will pay a stated amount, benefit amount? ADD. So twibuka ADD? ADD byo kuba impumyi. Naho twagiye gikomeye. P purchases 50,000 whole life policy mu 2005. Delphine ataravuka. One of the question on the application asks if P engages in scuba diving. Yeah, bindi byose scuba diving. To which P answers no. The policy is then issued with no scuba exclusion. In 2010, P takes a scuba diving and dies. Hey, wakundi bava mu ndege in a scuba-related accident in 2021, in 2011. What will the insurer pay to P's beneficiary? Bazaba hange? Nothing. Premiums paid plus interest. Ushobora ko ari iki cya mbere. Let me see. Ibihumbi mirongo itanu minus outstanding loan. Since P answered no to the question, about engaging in scuba diving, and the policy was issued without exclusion. No exclusions, as him. The insurer is obligated to pay the death benefit. However, if there are any outstanding loans against those would be deducted from whatever, blah, blah, blah. Wait, it doesn't make any sense. Oh, kubera, yeah, answer no. Byari biri exclude. Okay. Ntabwo byari biri mu mategeko. Yatinze. The beneficiary will receive 50,000 less any outstanding, okay, at the time of insured death. Policy is beyond contestable period, yeah. Kubera imyaka ibiri yarenze, okay, nice, okay. And then Jalike arimo aradusakuriza. Noneho twagiye. T took out 50 life insurance policy with an accidental death. 5 later, T commits suicide. How much will the insurer pay? Ibihumbi 50 zo kubera imyaka yarenze. The total premium paid. Kubera imyaka 5 kandi bavuze ibiri cya gihe. Umuntu wiyahuye imyaka 2. Rero 5 ndumva bamuhereza yose bayatanga yose. Ndebe hano. Nothing. Nothing. Most insurance policy includes suicide clause, typically excludes coverage for death by suicide within. Often 2 years after the policy issued, since T died was due to suicide, it would generally not be covered. Ikibazo kiracanganye. Njye ndumva bayatanga kuko byaneje imyaka 2. Reka dushyireho nothing today. Yeah, 50,000. Iyi ngiyi iranshutse. Abakurambere bagiye kuryama. So, the insurer, whatever, has the right to change a life insurance policy beneficiary. Yes, insured. Oh, nako policy owner nako. Nyiri policy yemerewe guhindura. Yeah. Ko ni wowe yoninze. G let her life insurance policy lapse 8 months ago due to non-payment. She can reestablish coverage under which of the following provision? You get turayibuka reinstatement, right? Noneho cya 13 kabaza ngo which provision prevents an insurer from changing the terms of the contract with the policy owner by referring to documents not found within policy itself. Turebe. uzi ko kwiga bikomeye kurenza gukora business. Entire contract provision. Okay. Yeah. Mukabisoma, meaning, policy, cannot, yego. Nabyumvishe. Ikibazo cya 13 cya kane kiravuga ngo the incontestable clause allows the insured to. Yeah. Tugire vuba turangize da. Baravuga ngo contest a claim. A claim. Period. Yeah. Contest a claim during contestable period. Ubwo mwabyumvishe hariya. The free look provision begins. Upon completion. At the date. No. Okay, twagiye sasa. Free look begins. Okay. Ni ngomba gusoma ukabyumva. The provision upon the receipt. Upon the receipt of the policy by the policy owner, yeah. Policy owner kibona ngo free look yatangira anytime. Cya 16 kiravuga ngo the arrangement in life insurance contract that states a specific sums of money will be paid to a designated person upon the insurer's death is called. Ceci. C'est un agreement mufitanye. Let's see. Insuring agreement, yeah. Ni iki ngiki. Cya 17 kikabaza ngo a term life rider offers the insured additional long-term care coverage, disability protection. Very additional maybe. Double checking. So hano baravuga ngo ni additional life coverage. Umuntu ufite term life rider ashobora kongeraho coverage. Which of these life insurance rider allows the applicant to have excess coverage? Ni iyihe? Term rider? Wave of premium? Okay, let's see. So hano baravuga ngo ni term rider. Yeah. Hey, harabura ibibazo bikeya cyane tukahita turangiza. Cya 19 kirabaza ngo B receives yearly dividend and interest from participating life insurance policy. Which of these should be included as a gross income? Federal tax purposes. So life insurance what I taxing us. Transkora ubwiteganyirize ni imisoro. Interest only. Okay. Interest only. Yeah, interest, okay. Participating. And the accelerated death benefit provision in life insurance policy is also known as living benefits. Yeah. Cyangwa ni iyi ngiyi et vivos. No, what is living benefit? Yeah. Cya nyuma na nyuma twakirangije, dufite amanota 90% twabipasinze. So chapter ya kabiri yarangiye. Thank you so much kwitabira. Ubwo rero nahejo ya nuko biga twebwe twabijyanye buhoro, ariko akenshi ufite chat GPT yawe uri kubikora vuba vuba ukabinanirwa ukongera ukabisubiramo, niko ugenda ufata nyine vuba vuba. So nta mpamvu yo kugenda gake. Sawa rero, mugire ibihe byiza, Imana ibahe umugisha. Bye 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 bye.